Hello everyone, welcome to the Ichimoku.co and ForexTrading.tv daily analysis for the Aussie dollar US dollar FX for Monday, November 11th, 2013. Well, a continuation of the trend to the downside today. The candle we're analysing is the second last candle on the chart here. The final candle that we're looking at here is a candle that's currently developing in the current trading session. It still has some time to go. But looking at that candle that has finalised trading, a continuation of the trend with the candle making a lower high and a lower low and a black body candle, therefore continuing the momentum in net terms to the downside that the market had built up over the previous two trading days. A very much smaller body though, and it suggests that a lot of that momentum that the sellers had found over the previous two trading days was perhaps drying up, and we had a spinning top type candle suggesting that there was a possibility of a change of trend to the upside. Now obviously with any of these potential changes of trend we need confirmation, and today as this market is currently developing we have no confirmation of that change of trend. We actually have continuation of that trend to the downside with the market testing down below the low of the current candle that has finished developing. The market at the moment is interacting with an important previous level of resistance around the 93.30 level. So that is a level that we should be watching quite closely for tomorrow's trading as we continue through the trading day. And that area also coincides roughly with the area around the top of the cloud. There is very good potential to see buyers come in around this area, but as this candle is currently developing, it certainly doesn't look as though that will happen. For the previous day's trading, we've seen the sellers lose control of the market. For the previous day, the day prior to that, the sellers had control, not strong control. They did lose some commitment as they tested down around the lows. But for today's trading, we've seen the market close roughly around the midpoint level, suggesting that neither side has closed with control and therefore setting the market up for that potential change of trend. We did have some strong resistance around the 94 cent level, so if we do see this market attempt to rally, that is an area that we may see some resistance come in, and then a recent swing low that the market traded through for the previous day's trading at 94.20 may offer itself as resistance as well. Now in terms of the Fibonacci extension, and here we're examining the relationship of the current first time frame downtrend that the market's in and comparing that to the previous time the market was trending down, and we previously saw the market trading through the 100% level and being rejected from the 161.8% level, suggesting a possibility of a change of trend. And then as we attempted to trade through the 161.8% level, we had this indecisive spinning top type candle, but the market did manage to close down below there. This suggests that there is potential for the market to trade down to the 261.8%, which is trading at 92.67. But we do have the top of the cloud before the market reaches that level, so unlikely that we will see the market test down to that 261.8% level. In terms of the Fibonacci retracement, and we're in an expansive mode of that, we've traded through the 100% level in a bearish manner previously, finding support at the 161.8% level, which is just here at 93.45, and for today's trading being rejected from there for the second consecutive trading day. But as this market is currently developing, we are seeing the market extend down through there, continuing the trend to the downside. Now as with any of these techniques, we do require confirmation of a change of trend, and that current candle that had finished trading did set the market up for a potential change of trend, but we're not seeing that happen. We're not seeing the market as it's currently developing favour the buyers in any way, and the sellers are at the moment very strong in this market, and there is good potential for the market to trade lower. The next Fibonacci level here is down at the 261.8% level, a long way away from where the market's trading at the moment. In terms of Ichimoku, obviously still a bullish market in the long-term time frame with the market trading up above the cloud, but only just, and there is potential for this market to become neutral if it does trade to within the cloud and therefore change the overall bias in this market. But we are still holding on to a slightly bullish market in big picture terms. In the shorter time frames, we have a bearish market in the medium term time frame by trading down below the Kijun and the pink line, and we saw the market break out down below there, giving us a sell signal, rally towards the Kijun and then sell off from there quite strongly, and that suggests that we do have a strong bearish bias in that medium term time frame. We also have a bearish market in the short term time frame by trading down below the Tenkan and the green line. If we look here at the Chica span, that's now trading below the corresponding price action. It's suggesting now that we have some negative momentum in the longer time frames, and suggesting that there is good support for this market to trade lower. So what we need to do here is watch how the market reacts to the area around this 93.30 level, this previous support and resistance level. And also watch how the market trades around the top of the cloud. With this Chica span turning negative, giving us a negative sentiment, there is a possibility of the market trading deeper into the cloud and finding support further down within the cloud. But as I've already mentioned, we do need to be reactive to the market. If we see buyers coming in around this 93.30 level or around the top of the cloud, we could see potential for a change of trend in the market, trade to higher levels, but we do need to be reactive.